Look, crypto, Bitcoin, crypto broadly, it is just a giant macro trade, right? What it
Yeah.
is, crypto per se, stable coins and cryptocurrency are better rails for doing finance of the future. So the financial services market will eventually all be on crypto. Now, some say it'll all be on Bitcoin, some say it'll all be on Bitcoin, Ethereum, and a few others. At the end of the day, we'll find that out. But ultimately, everything, right? Every stock, every bond, every currency, every commodity, everything is going to be digitized. We backed a company Figure that is helping put real world assets on chain for the first time.
One of the most important framing points is this: crypto is not just a technology trend; it's a macro trade. In Yusko's view, Bitcoin and crypto broadly represent a response to global monetary conditions, especially the expansion of money supply. When liquidity increases and fiat currencies are devalued, scarce digital assets like Bitcoin tend to perform well. Recent performance supports this thesis. During periods of geopolitical instability and rising global liquidity, Bitcoin has outperformed traditional assets like stocks, bonds, and even gold. That's a notable shift, suggesting Bitcoin is increasingly behaving like a macro hedge rather than a speculative fringe asset.
Sure, but I mean, definitely there's a risk, Paul. I just don't think that's going to happen, unfortunately. I think Clarity in its current form is a horrible bill, right? It's been written by the usual suspects, the incumbents who are backed by, big money in the incumbents, big banks. And, they've said it out loud. Like they've said the quiet part out loud.
Right.
You had, Moynihan at Bank of America say, well, we'd lose trillions of dollars in deposits. Yeah, yes, you would, because if you don't pay people for their capital and they can get paid somewhere else, they will move. And, it's just interesting. I think the Genius Act and Clarity together, I believe, were written in such a way to try to forestall the inevitable, which is the transition to a better form of money and where we can be our own bank.
Yeah.
But, but I do think that there's enough people on the other side pushing for real regulatory change and regulatory clarity that, we're at that funny divide that ends up with no action, which, maybe that's good for us long-term. Look, crypto, Bitcoin, crypto broadly, it is just a giant macro trade, right? What it is, crypto per se, stable coins and cryptocurrency are better rails for doing finance of the future. So the financial services market will eventually all be on crypto. Now, some say it'll all be on Bitcoin, some say it'll all be on Bitcoin, Ethereum, and a few others. At the end of the day, we'll find that out. But ultimately, everything, right? Every stock, every bond, every currency, every commodity, everything is going to be digitized. We backed a company Figure that is helping put real world assets on chain for the first time and basically competing against DTCC. Right. So I do think this is all going to happen. I just think, look, the president said whatever it took to get elected. That's what politicians do, right? And so he made a bunch of promises. I'm a big Maverick fan. Son, your ego's writing checks your body can't cash, right? Top Gun. So he can't do the things that he promised unilaterally, so he needed Congress. Well, Congress, most of them are funded by the people that crypto is trying to displace.
Right.
Ms. Warren, for example. So I'm not saying he's good, bad, or indifferent, other than he's been ineffective at pushing the legislation he promised because, well, one, presidents don't make legislation. They sign it after Congress does. And two, his team is good at certain things, but they're certainly, what it appears so far we've seen, not really good at affecting much change of any time. Yeah. And then this gambit in the Middle East, we could spend all afternoon talking about it. I just think complete disaster on every front. We got 800 ships stranded in the Strait still, despite it, being the blockade, and then the blockade of the blockade, and then we're open, but then we're not open. And at the end of the day, you can't, I don't believe, right? And history would be on my side. You can't win conflicts halfway around the world. We've tried dozens of times, and pretty much lost them all. And, if it escalates to a world war, we're undefeated there. But I think the skirmishes tend to be just long funding acts for military spending, and that's not really good for everything else.
Sure.
Except for money supply. Global money supply, Paul, is on an extreme ramp, which is partly why, since the shooting started, the best performing asset has been Bitcoin. And it's not close, right? Gold is actually down since the shooting started, and stocks are basically flat. Bonds are basically flat. Bitcoin's up. So it's interesting. And there's this confluence of, or not confluence. There's a conflation of terms. Everyone talks about retail money, but they don't take out essentially the institutionalized retail, which is every 2 weeks, people's 401ks and 403bs go into the market. That's not retail speculation. That is your pension fund that went from defined benefit to defined contribution back in 1986. So that money just goes in, and it's dumb, meaning it's rules-based. It's passive. It doesn't get to think. It has to buy whatever has the highest market cap. And so that just continues to buy. The other thing that doesn't jive with what he's saying is, retail going to the sidelines. Options activity and single day options are the highest they've ever been. And so, yes, there's speculation. My view is the speculation is small. It's kind of like when people talk about Robinhood versus Schwab or Vanguard or Fidelity. Yeah, it's growing really fast, but the average account is $4,000. It doesn't really matter. Now, it can matter for a single stock, like what's happening with Avis Budget. You can engineer short squeeze like what happened with GameStop. But for the overall market, it's just not enough money compared to what the boomers, right? My brethren and sisterin out there that own all the assets. Look at the difference between the top 10% and the bottom 50% in terms of ownership of assets.
Huge difference.
It's all at the top. And those people, what are they buying? They're buying bonds. They're not buying green bananas, and they're buying bonds. And that's a very different dynamic. And it's partly why we see more deflationary forces than inflationary forces. We see devaluation forces, and we see oil price increases. And that's the last one where I don't agree with the consumer being in good shape. The consumer was expecting the largest tax refunds, I think, in history. That's just law of large numbers. But most of it is going to be totally erased by the fact that gasoline prices almost doubled.
Yeah.
That was the worst decision, I think, in terms of the incumbents wanting to win midterm elections. If gasoline prices are still over $4 by fall, they're going to get slaughtered. I mean, it's not going to be close. So now they'll have Treasury Secretary and head of the Fed both in the club steering in a certain direction. And look, ultimately, this is the only way out, right? What this group of people is trying to engineer is something that mathematically shouldn't occur. A market can't really be worth much more than the GDP that produces the market. In fact, it should be worth about 70 cents on the dollar, because remember, it costs money to make money. Right? When we run a factory, we have to spend for electricity. That's the crazy thing about OpenAI. They take in $1 of revenue and they spend $3.58. You can't make that up on volume.
The discussion also touches on geopolitical conflict and its economic consequences. Yusko views many modern conflicts as prolonged, resource-draining engagements that ultimately expand government spending and increase money supply. That expansion, in turn, benefits scarce assets like Bitcoin, He highlights a pattern. Conflict increases spending. Spending expands money supply. Expanded liquidity boosts hard assets. This helps explain why Bitcoin has performed strongly during periods of instability. It's not reacting to headlines, it's reacting to monetary conditions created by those events.
I don't think Trump or any president that we've had for the last, 100 plus years is in charge, right? There's a different group of people that make the decisions and get the people appointed that they want appointed and get the people elected that they want elected. And that's how our system works, right? The people with the money pull the strings. So I don't think the Donald is the puppet master. I think he is a puppet himself. Trump didn't pick Kevin Warsh. Someone else said, this is the person you're going to put in. Right. Same thing with Jerome Powell. I mean, I'm not saying Donald Trump isn't the person that could make that type of decision, but he's not an economist. He doesn't hobnob with people in the economic industry or the financial services industry. He's a real estate guy. And so his ability to say, oh yeah, that's the most qualified person for this job, it's not how it works, right? You get some people to help you identify. I would argue that there's another group of people behind those people that, sets these things in motion. And that's
interesting.
Why if you look at different cabinets, they look the way they do. What we know about Warsh is he actually is pretty well qualified, like maybe the most well qualified person we've had in a long time. I mean, whether he is beholden to a whole bunch of people who got him to where he is, we'll find out. No, I think the 4-year cycle exists because of Bitcoin code, and therefore an Ethereum follows Bitcoin and just it's a liquidity, waterfall. So I don't think so. I think it's good for Ethereum. Don't get me wrong, but I don't think it breaks the cycle. Humans are going to human.
Let's go for it. If clarity doesn't pass, we crash to a new yearly low on crypto in general.
No, I'll actually go the other way. If clarity does pass, we probably extend the bear market longer. I think if clarity passes, maybe instead of being September, October to get the ultimate kind of break into crypto spring out of winter, maybe that advances.
All right, so I'm going to say if it doesn't pass,
if clarity doesn't pass, we crash to no. I don't think so.
No. All right. Okay. Let's move on to this one right here. Circle learned their lesson on not freezing hacked funds. Do you agree on that one? Hacked funds.
So Circle will not freeze hacked funds.
Yeah. Okay. So that's the question. Do you think because they did not freeze hacked funds and they had the chance?
Oh, okay. Got it. I misunderstood. I thought this said that they did. Tether's market cap versus Bitcoin. Yeah. No. Oh, for sure. I mean, because the third year is always amazing because the incumbents trying to, keep their party in power. So they will pull out. I mean, whether it's putting pressure on the Fed, whether it's passing fiscal stimulus, whether it's, he's already promising the biggest tax cut in history, which never delivers, but he's promising it again. So third year of presidential cycles are always, the best. Definitely FTX. I mean, people are trying to make World Liberty out to be some big scandal, but it pales in comparison in terms of dollars. Look, presidents have taken donations from world powers. They did it through their foundations.
Sure,
right?
Now this is just a creative crypto way.
And why is it okay for the Clinton Foundation to accept a big, giant donation from the Saudi government? I've never understood that, right? Because if they're still in power, why should they be allowed to do that? But they were, and all the other presidents have foundations. So I just think it's a new age version of the same bad actor, and I just on the verge of no. I think the FUD is really active. I think there are some people that are worried about it, but I think generally speaking, those of us, and because I'm a boomer, those of us who know anything about Bitcoin are not really worried about it.
Okay.
Quantum is one of these things that the idea is interesting. In practice, we're still a long, long way away, and I still contend that if I were gifted a quantum machine, the first thing I'm attacking is not Bitcoin. That's worth, Satoshi's coins are
small
worth
market cap.
few tens of billions. The nuclear codes are worth way more than that. JP Morgan's bank accounts are worth way more than that. So I don't see it. But so I'm on record saying that the rebranding of gambling to prediction markets is the greatest rebrand in the history of rebrands. I mean, it's like, it's like trying to upgrade the world's oldest profession to, the escort service. I mean, it sounds a little better, but it's the same thing. And so now trying to brand it as an insurance marketplace. No, I mean, it's still speculation and gambling. Now, can you say insurance is a form of speculation? No, it's a form of hedging, and insurance is about spreading risk. So I guess I'll circle all the way back to say it's certainly possible that if
I'm gonna put you in the middle.
No, it's certainly possible that if people are willing to accept that this marketplace is a place to pool risk. Now, history has shown that these marketplaces don't actually develop. And the reason mostly is because regulators don't like it, right? If you think about it,
well, there's a fight for it now.
We should have nationalized health insurance. Oh, no, we don't. No, of course you do. We don't want each state to be a separate risk pool. We don't want each company to be like, I have, 25 people in my company, and I'm a risk pool. Well, that means if I have one person who has to buy an expensive drug, my premiums go crazy. That's just silly. I should pool with dozens of other groups.
Similar companies, yeah.
And the more you pool your risk, the better. So I can see the efficacy of broader, faster, real-time updated markets being, used for insurance.
Another key point is the relationship between market valuations and economic output. Yusko argues that markets cannot sustainably exceed the productive capacity of the economy by large margins. When they do, it suggests distortion, often driven by excess liquidity or speculative behavior. He uses a simple logic. It costs money to generate earnings. Therefore, total market value should logically be less than total economic output, not significantly more. When that balance breaks, it raises questions.